lunch session, and that was a track by David Bowie, which Jackson tells us was the song, the last song that Bowie sang live before his death. There you go, bit of trivia for you. Now, it's shaping up to be a terrific first day, and what better way to finish it off than with the poolside drink. Now, for the last few years, the opener, as we've called it, has been sponsored by Ingenium, but the business announced it was joining Stantec early last year. So this year, we're delighted to have Stantec on board as our sponsor. So who are Stantec? Well, they're designers, engineers, scientists, and project managers innovating together. And the Stantec community unites more than 25,000 employees in over 400 locations across 6 continents. And globally, Stantec has over 1,100 employees dedicated to providing engineering and environmental services across all phases of the mining cycle, the mining life cycle. In addition to metallurgical test work, process design and scoping and feasibility studies, Stantec offers environmental services, mine approvals, and community engagement initiatives for greenfield mine development. So to find out more about Stantec, visit booth 24 or chat to them poolside with a drink a bit later, which sounds quite civilized. Now, the next segment is sponsored by HWL Ebsworth Lawyers and Noah's Rule. And David Naoum is a partner at HWL Ebsworth with over 15 years' experience as a corporate lawyer. He advises on a wide range of corporate matters with a particular focus on mergers and acquisitions, both public and private, and equity capital market transactions. David has also regularly assists clients with their company secretarial functions and advises them on matters relating to the ASX Listing Rules and Corporations Act. He joins us now to look at recent regulatory issues. David.
Thank you very much, Jerry. So yes, thanks very much for that introduction. So yes, I do advise regularly on IPOs and other capital raisings and M&A transactions, and I am a partner at HWL Ebsworth. And today I'm going to just talk about recent regulatory issues that we've seen with IPOs over the last year or so. Sorry, Jerry, just with in terms of the slides, how do I bring them across?
Moves them forward, whoever moves them back, and there's your.
Thank you very much. Just an outline of today's talk. I'll just touch on the IPO market in 2021. It was very much a bumper year. I'll go through some of the key listing requirements, what it takes to actually list on ASX, and then I'll touch on the recent regulatory issues, some of the more bespoke issues that have arisen in the last 12 months or so. There's been a focus on the commitments test by ASX, the minimum shareholding spread test. There's been a crackdown on advisor fees, and there's a limitation on what can be paid to advisors in connection with IPOs. Performance securities and milestones of performance securities has been a focus of ASX as well. They've also looked at seed raisings and in the lead up to an IPO and the pricing of those raisings, and conflicts of interest for pre-IPO transactions and how they're managed. As I said, it was a bumper year for IPOs in 2021, especially compared to the previous year. It was the highest number of IPOs recorded in the last decade or so. There are 191 new ASX listings in 2021 compared to just 74 in 2020, 68% of which occurred in the second half of 21. The total funds raised was 12.33 billion compared to, well, more than double that in 2020. And the resource sector floats was very, very strong, 112 listings in total, raising 2.27 billion, and over 60 of the listings had significant gold projects. So just to go over some of the key listing requirements, it's appropriate to say at the outset that ASX has an absolute discretion as to whether an entity can list on the ASX, and there is a rule and exercises its discretion as to whether an entity's structure and operations are appropriate for a listed entity. So what invariably happens is an entity will go to ASX upfront and make an application and get approval and seek confirmation of how ASX will exercise this discretion. And in this application, the entity bears all basically. It discloses much about its business model, history, financial condition, governance arrangements, board composition and contractual arrangements. Going on to some of the other tests and requirements. So an entity has to satisfy either the profit test or the asset test. Invariably, as a junior explorer, you'll seek to satisfy the assets test, which essentially requires that the entity have on listing at least $4 million NTA after deducting the cost of raising, or a market cap of 15 million, a working cap of 1.5 million on listing, at least 2 years of audited financial statements, and otherwise satisfying the commitments test, which I'll touch on a bit later. The company must apply for and be granted permission for quotation of its main class of securities, which is basically its ordinary shares, has to have a constitution that complies with the listing rules and all relevant laws. The structure and operations need to be appropriate, as I alluded to earlier, very discretionary from ASX's point of view, how it applies that rule. ASX has to be satisfied that the company will comply with the listing rules, and each director, proposed director, CEO, proposed CEO, CFO, proposed CFO has to be of good fame and character. That's satisfied invariably by ASX looking at police and insolvency checks of the relevant officers, and those officers providing a statutory declaration as to character. You have to lodge a prospectus with ASIC and ASX in order to get listed. The minimum listing price has to be at least 20 cents. The company also has to have a free float of at least 20%, being the percentage of the company shares that are not subject to escrow and are held by non-affiliated security holders. An affiliated security holder is basically a related party, which is basically a director and their relatives and associated entities and persons. You also have to satisfy the minimum shareholding spread test, which requires there to be at least 300 non-affiliated security holders, each holding a parcel of at least $2,000 of shares, excluding escrowed securities. Companies are recommended to comply with the ASX corporate governance principles and recommendations. It's not mandatory to comply with them, but to the extent that an entity doesn't, it has to report that to ASX. And the company must have a person who is responsible for communication with ASX ongoingly for listing rule matters. Just some of the more topical issues now. The commitments test, it's been a focus of ASX recently. So the commitments test is part of the assets test that I referred to earlier. And it basically provides that after raising funds, less than half the company's total tangible assets must be cash or in a form readily convertible to cash. Or the company must have commitments consistent with its stated business objectives as outlined in its listing prospectus to spend at least half of its cash. So the recent focus from ASX has been in relation to that second limb that I just referred to provide what is called a no impediments confirmation. So essentially ASX is now seeking a confirmation that the entity doesn't have any legal, regulatory, statutory or contractual impediments to spend its cash on its proposed activities from day one. And so for a junior explorer, that necessarily means invariably having sufficient access to your tenements to undertake proposed exploration activities from the date of listing. If there's ministerial consent, third-party approvals or other contractual entitlements or obligations that impede that, then that can be quite problematic. The minimum shareholding spread, something I referred to earlier, just to go over it, there's lots of rules and policies associated with satisfying this. Again, you need a minimum of 300 non-affiliated security holders with $2,000 plus parcels, excluding escrowed securities, to satisfy this test on day one of listing. ASX is focused basically on ensuring that there's no artificial creation of spread or doctoring of those numbers or shareholders. So related parties and escrowed holdings are excluded from the calculation. And you can't have more than 2 people at any one physical address, according to the ASX rules. Brokers have to provide confirmations about addresses for broking accounts, and you need company searches for all companies that are on the spread register, and there's special rules for custodians and nominees. Generally, given the discretion that ASX has in relation to spread, we recommend that our clients get at least 375 to 400 names to make sure that they don't fall foul of the minimum shareholding spread test. There's been a big crackdown on advisor fees. This is informal, unwritten ASX policy, but essentially in the last year or so, ASX have basically enforced a policy that all lead manager, broker and corporate advisory fees in connection with the listing must not exceed 10% of the minimum amount raised under an IPO. So it's the aggregate of all of those fees, and that will include any cash and scrip fees. And you've got to provide a valuation of the scrip upfront as part of your in-principle suitability application in order to get that ticked off by ASX. There's also been a focus on performance securities and ensuring that there's appropriate and equitable performance milestones associated with those performance securities. ASX needs to approve the milestones and the terms of the securities that are issued or to be issued. And if they relate to a resource, reserve or production target, the size and grade of those have to be part of the performance milestone. And they have to be linked to a particular project or mining facility in order to be acceptable. The milestone, the achievement of the milestone has to be independently verifiable by a competent person, and it has to be achieved within 5 years or less. There's also essentially a limit on the number of performance securities on listing. It cannot exceed 10% of the fully diluted share capital on listing unless you include an independent expert report in the prospectus, which is fairly undesirable and therefore not done. So there's effectively a 10% limit. There's also been a very strong focus by ASX on seed raisings. Seed raisings approximate to a listing need to be appropriately priced. So ASX has particular concerns about seed raisings that have a significant discount to the IPO price that are approximate to listing. And that is where it forms the view that the purpose of the seed raising was not to raise genuinely needed seed capital, but to confer a benefit on some of the recipients, including related parties, promoters and advisors. Generally, what we're finding acceptable is if it's, for example, a 20-cent IPO listing price, there should be a seed raising proximate to listing with an issue price of no less than 10 cents in our experience. And finally, there has been a focus by ASX on conflicts of interest, particularly in relation to vend-ins by related parties and other pre-IPO transactions and matters. So ASX will scrutinise these transactions and the governance related to them fairly closely, and they'll be concerned with the ongoing management of those conflicts of interest after listing. So it's very important that they are well documented and that there's a demonstration that appropriate management of conflict of interest procedures and protocols were in place at the time of any vendor sale. Where there's a related party transaction, it's important to be able to establish that that transaction was on arm's length terms. So either received non-interested director approval. There's board minutes demonstrating that. There's some level of benchmarking, including an independent valuation that you can demonstrate to ASX and also disclose in your prospectus. And ASX will also look at the board composition, whether there's sufficient independent directors to approve matters going forward in relation to vendor-related matters. And that was essentially it, Jerry.
Thank you very much. Sunshine Gold is rapidly advancing its portfolio of high-quality gold, copper, molybdenum, and rare earth projects in the Sunshine State in Queensland. Here to give us the latest is Sunshine Gold Director Les Davis. Welcome, Les.
Thank you, Jerry. It's a pleasure to be here at the RIU conference this afternoon to introduce Sunshine Gold to the audience, a relatively new player in the exploration space on the ASX. We've done a reverse takeover of Pelican Resources back in December 2020, and since then, as I'm about to present, we have come ahead in leaps and bounds. Standard disclaimer. Sunshine has 548.8 million shares on issue, current market capitalisation of 22.5 million, cash at the end of December was 4.9 million, and the directors have significant skin in the game, totalling 27.3%. More importantly, since inception, the directors have tipped in $2.7 million into this enterprise. And there's a couple of reasons that we do that, is that we can see the return on investment over the longer term as we continue to grow and truly believe in the things that we do. And as all exploration companies, you need to continue to raise capital to deliver your business model. So it's very hard to ask people to tip money into your dream if you're not tipping money in yourself. Unfortunately, Damien Keys, our Managing Director, couldn't be here today. Damien resides in Townsville, and because of the border situation, he could not get across. What I will say about Damien, I've managed to work with a lot of geologists over my career. He's certainly up there with the best of them. He has a PhD in structural geology. When I first started working with Damien in my Silver Lake days back in around 2010, and he really stood out as a guy, given his structural skills, as someone that we needed and relied upon. Then we started working with Damien at Black Cat, and more recently with Spectrum Resources, where I was a director of that company, and we had the Penny West deposit. Now, Damien found that deposit with his skill set in structural geology because the original ore body was offset. And subsequently, we sold that asset within a takeover deal with Ramelius Resources for around $220 million. So one of Damien's key KPIs is to at least find that sort of value for our shareholders. So rounding out the board is Alec Pismiris, Anthony Torreson, and Paul Chapman. Investment case. Who are we? Where are we? We have a large land holding in an underexplored Tier 1 jurisdiction in Queensland. We have leverage to multiple high-value metals, being gold, copper, moly, silver, and rare earths. As I mentioned, we're well funded with $4.9 million of cash. We are putting out our maiden JORC resource at Triumph, and that'll be out next month. We have an emerging copper, silver, and moly system unfolding at Ravenswood West, and we put out an announcement last week about rare earth potential at that same project. There's no question when you look at the data that Queensland is underexplored and well endowed. It boggles when I put this slide together that over the last 20 years, Western Australian exploration spend is 6.4 times that of Queensland. So $28.3 billion spent versus Queensland of $4.4 billion. So although the drilling intensity at a lot lower gold price and copper deposits have been found here are large. You go from your Ravenswoods, your Mount Morgans up around your 8 to 10 million ounces, down to your Mount Wrights of around 1 million ounces. And let's not forget about the prolific Mount Isa copper district. So the data would suggest that significant opportunities remain for large discoveries based on a similar sort of intensity into the Queensland state. So our project portfolio, I'll talk on the first two projects, given this is a 15-minute presentation. So Triumph Gold Project, it's a 15-kilometre intrusion-related system under shallow alluvial cover. So as I mentioned, we're putting out our maiden JORC resource. We're very excited about Ravenswood West. And I'll talk a little bit more at the booth if you've got time to come around about the Investigator Copper Project. And oddly enough, that is where Damien done his PhD for his structural geology. So does he know something we don't know? Over time, let's find that out. And we've got the Hodgkinson Gold Project to the north as well. So Triumph Gold Project, it's located 50 kilometres south of the Gladstone Mining Centre. We completed in March of this last year a 7,120 metre program, and we had a lot of good drilling success at Super Hands, Big Hands and New Constitution. We've just recently completed around another 9,500 metres for the reason of infilling and some extensional work to delineate a maiden JORC gold resource. So another 8,800 metres, around 80 holes of RC and 4 diamond drill holes have been completed here. And as you can see, the location here, we're surrounded. Further to the west, we've got Mount Morgan. To the south, we've got Krakow. And further south, to the west, get mixed up when I'm on the east coast, we've got other large deposits around us. So the drilling campaign, what did we uncover? You can see the Norton Fault in the middle of that image on the screen. So we've only been focusing on the southwestern portion of that fault. So what we're calling the southern corridor, which makes up the deposits. I won't read out all of the intercepts today, but as you can see, there are some very thick, high-grade intercepts leading to over 100 gram metres in most of those deposits that make up the southern corridor. We will explore further to the northeastern side of the fault over time, but at the moment, where the maiden JORC resource is coming from is just in this southern corridor. When you take an aerial view of this and what can it look like, you can see all of with the pink colour, you can see the outline of the mineralisation. So the focus at the moment over and above the assays you can see listed there is that the red boxes are where the maiden resource will come from. So we've currently drilled that. The yellow boxes are where the extensional drilling has been undertaken. So some of that will make it into resource, but some of it will also need further drilling. More importantly, we still have 2 kilometres of undrilled mineralisation in the southern corridor is yet to have a hole into it. So from our maiden resource, the objective here is to get onto the league ladder with a maiden resource and continue to grow it. So whatever we announced at the end of March is just opening of the batting, for want of a better word. We have enough room here to grow that resource. And as I mentioned, we're only just focused on the southern side of the Norton Fault at the moment. So when we move over to the northern side, there's a lot of value in this project. It is our view that our current market cap of $22.5 million is supported by the Triumph project alone. Now for the upside. Our Ravenswood West project, it's 100 kilometres south of Townsville. So when you look at where it's located, it's right in the heartland of some multi-million ounce deposits. So it's a pretty good place to be doing business. We acquired this in late March 2021. The greater district has produced over 20 million ounces of gold. It's adjacent to the 9.8 million ounce Ravenswood gold mine, where EMR have just spent $300 million on recommissioning. And it's highly prospective for whatever style of gold deposit you want to find there. But more importantly, there's a lot of copper and a lot of moly coming into the system that we've identified in a very short period of time. So if you look at our copper, gold, silver and moly targets, this is a 15-kilometre trend line that Damien and his team have identified. And it starts at a deposit called Titov in the north, where you can see the top of the green arrow, all the way down to Elphinstone Creek in the south. So drilling in the 1950s and the 1960s confirmed broad zones of copper and moly, but they were never assayed for gold and silver, which we have pulled up the holes and we're currently getting those reassayed as well. So there's large-scale targets here with no mineralisation that we'll certainly test throughout the remainder of 2022. But more importantly, we've only just done 2 reconnaissance drilling programs here. So what have we found? So at Titov, so there's nothing better than standing on, you can see the white arrow there that's got the 350 metres. So that's the identified strike at the moment, but it outcrops on rock. And you can stand on the Titov hill and look into the background, you can see Mount Wright, which is a million ounce deposit. So it's not bad when you can stand at your own project and say, well, can we just bring that a little bit further forward towards us? The shaded area you can see there is the gold in soil anomaly. So we did have rock chip samples that tells us that there's gold there. And when we done the initial drilling campaign, we didn't actually get any gold in the chips. So the question is, how do we explain surface expressions of gold and not in the core at the moment? But as I mentioned, we've only drilled, a dozen odd holes here. So we need to answer that question, of course. So if you can see the black arrow there pointing to the red dot to the right of screen. So what we have done here, Damien designed a drill hole to drill directly underneath the Tyrrell hill. So the ore body sort of dips 60 degrees to the right of screen. So we've drilled down 200 vertical metres deeper than the last known deep hole here. Now, the key thing we need to do here is to do the metallurgical test work, which is in progress, and we should have that back in April. And the reason for that is we can then quote copper equivalent. Until we tick that box, all we can talk about is the intercepts. And as you can see, there's multiple intercepts of plus 100 metres at an average of about 0.4 copper and about 0.1 moly. So getting the metallurgical test work is a key in the next part of the process. Then we can work out how much drilling we need to do to start bringing this into resource and announce to the market the quantum of metal potential in the ground at this project. So the diamond drill core, let's hope it assays as good as it looks. You can see the molybdenite there in the top photo and the chalcopyrite in the bottom photo. But more importantly, where we collared the hole, we're outside of the main zone that we were targeting. So we've had very intense quartz veining from the time we collared till we got down to the target area. So we don't know how that's obviously going to grade. Damien assures me, and I'm not a geologist, but he tells me that when you're in the potassic alteration here, and you're seeing that in the foot and the hanging wall of what you're targeting, and you're still getting chalcopyrite and quartz veining, he said, just wait for the assays, Les, and we can talk more about it. So granted trust, he'll deliver on what he thinks is in this diamond drill hole. Elphinstone Creek, it's early days on this part of the project, but it's further south of Cairns. So I've talked about Tydolf to the north, talked about Cairns to the south, 15-kilometre trend. Now, in between that 15-kilometre trend, there's no other meaningful data at the moment. Time and money will answer those questions. So Elphinstone Creek, further south, it's anomalous for rare earths at the moment. We've done some street seed samples, and we're really happy to date with what we're seeing. We've only sampled around 14% of what needs to be sampled, and it's got very high ND and PR content. And that's what you need to make a successful product with rare earths, because they are the highest two elements in the value chain, and we've got very good grades of those. So let's take a helicopter view of the Ravenswood West optics. So we have leverage to multiple high value metals. Gold at the moment around 2,600 Aussie an ounce, copper 13,660 a tonne, moly $63,000 per tonne, ND and PR around $70,000 per tonne. So what do we know about Tydolf today is that we know it's outcropping at the surface. We've got plus 100 metre multiple intercepts. When you're working out the volume of what this can be, you can see 350 metres of strike, 350 metres of depth. The diamond drill hole is telling us around 80 metres thick at an assumed SG. You're going to come up with quite a few million tonnes of ore sitting in the ground. $1 million question is, at what copper equivalent grade? We'll tell you that in April. Further south at Cairns, we're getting narrower but highly enriched zones up to 4.1% copper. And we've got the gold down there. So where is the gold to the north? We've got it at the south. As I said, in the middle, time and money will answer those questions. 120 grams silver and 1.1% moly. And when you think about moly, I've done some reading, and the International Moly Association, the definition of a viable ore body grade range is 0.01 as a byproduct or 0.25 as a primary product. We have multiples of 10 higher than that definition. So obviously, copper grade aside, it will drive up your copper equivalent grade, which then drives up the amount of potential in the ground here. And as I mentioned, Elphinstone Creek, high grade gold anomalism and high NdPr content. It is early days here, I will admit that, but very encouraging results. Sorry, how do I go back, Jerry? Upcoming catalysts. This is important because this is news flow. So what can re-rate the company? Remember I said, it's our view that what we're doing at Triumph justifies our current market cap. Talked about that. Triumph's drilling results will start to filter through early next week. We'll continue with further results into March. Maiden JORC gold resource, in March as well. Titov diamond drill results, watch this space, and further soil sampling for the recommencement of that program. Then into April, metallurgical test work results. Hey, then we can talk about copper equivalent. More IP results at Titov. We're currently sampling some historic diamond core, and we'll be also doing some more drilling there. In this game, it's not all about winning, but it's certainly about ticking the boxes to make sure you don't run second over the longer term, and that's exactly the plans that we have in place. So in summary, look, we've got the ground, we've got the people, we're well funded, and we're highly active. We've done a hell of a lot in the first 12 months of our life, drilling over 24 kilometres to date. And the leverage, as I mentioned, to the multiple high value metals here. If you need any more information, please drop into booth 48 and let's have a chat. Thank you.
Thank you, Les Davis, for that high-octane, on-time presentation. Stavely Minerals is currently completing phase 1 of a mineral resource drill-out, as well as conducting the most comprehensive regional exploration program undertaken in the Stavely era in Western Victoria in 4 decades. Executive Chairman Chris Cairns is here to tell us more. Chris.
Thank you, Jerry, and thank you to Stuart again for the opportunity to speak. Normal disclaimer. So, as I had set up here on this stage, and we were awarded the Craig Oliver Award, and a great honour for us a couple of years ago. But when we went into Victoria in 2013, people thought we had rocks in our heads. They thought that was absolutely crazy. Now, not quite 8 years later, there's quite a gold boom going on, but there's also a copper renaissance in Western Victoria that really people weren't aware of until we'd made a discovery. That was in September 2019, and now we're drilling it out. I'm very pleased to tell you that whilst we had access issues in an area south of the railway, we managed to get on the ground there from the 1st of December with 4 diamond drill rigs, and we've completed 17 of 20 holes that we need to finish that resource. So we're just about there. It's a new style of mineralization. It's butte or magma style, so well known in the US, but no known examples in Australia. So I think that's why previous explorers, including Rio Tinto, Newcrest, North Limited, didn't recognize the potential of the project until after we picked it up, and did quite a bit of drilling, admittedly, and working with consultants like Greg Corbett and Scott Halley, identified what the true opportunity was. And then with our first drill hole, trying to target this style, we made the discovery. But there's a lot more to come. We've got a large regional footprint, and there's more in this large system itself for additional discoveries. But we're well funded, almost $9 million at the end of the year last year. So just the summary, as of yesterday, closing price 47 cents, 120 million market cap. It's been a bit of a roller coaster, admittedly, price-wise, but we've been consistent in our level of activity, up to 6 rigs operating last year, but very, very busy in terms of drilling. It's been a drawn-out resource drill out because it's had to be all diamond. There's saline water very shallow on the surface. It's an agricultural area, so it's been like watching paint dry, but we're almost there. Right. So as I say, we've got a fairly dominant ground position. We certainly have all the ground that we want in the critical areas. These are Cambrian age volcanic belts, 1,500 square kilometers, and we really control most of the area that we want. A large part of it is undercover, and I'll come to that a bit later on. So we focused initially on Thursday's goss, and our belief was that the chalcocite blanket of 28 million tonnes of 0.4% was a feature of enrichment on top of a porphyry, which also was the view of previous explorers. It wasn't until we drilled a number of holes and hit some structurally controlled high-grade mineralization that we realized that the blanket, in fact, came off the structurally controlled ore bodies. So we were focused in this area. We had very strong indications of a late stage porphyry system with a lot of porphyry M veins and a high level porphyry. We chased that for quite some time, and it culminated in a 1.8 kilometer deep hole that, quite frankly, got into a barren core of a porphyry. So it was completely unsuccessful. And that's the point at which Scott Halley said to us, well, look, you've been hitting this high grade structurally controlled mineralization. Why don't you go for a magma type target shallower? And that's where this hole 50 was targeted at that structure. The very first hole after his advice. And as they say in the classics, the rest is history. So that was an intercept of 32 meters at almost 6% copper and a gram gold from 62 meters depth, which is a far cry from drilling 1.8 kilometer deep holes looking for a porphyry. And really, it hasn't moved on from there. I think just to point out in the picture, the paragenesis is early pyrite, massive sulfide in this structural position. And then later that's brachiated and opened up, and the high tenor copper sulfides come through. And in this case, you see the bornite, and here you see some chalcocite, that silvery sort of mineral. So now, as I say, we're just coming to the end. It's this southern area here where we had a lack of access. We're just finishing off that drilling now. Ostensibly a 40 by 40 sort of a drill grid, which may be over drilled, but you never know until you do your geostats. The ranges are looking like 80 to 100 meters. So you'll note that that southern drilling has opened up a little bit, but we don't think that's going to have any impact in our ability to classify most of the resource as indicated resources. So high level of confidence. As mentioned, so that resource coming out Q2, we have a parallel scoping study underway and likely to come out, pushing out a little bit and probably dependent on when we get assays, as is everybody else in the industry, just pushing that timing out a little bit. And that's just an illustration. That's the southern paddock where we've had trouble getting access for 2 years. We're now in there and we've drilled 17 of 20 holes. So it's a big system up the northwest there. That's the furthest hit. It goes into a zinc base metal, precious metal type of a system, which is very typical of these magma systems. Down the south, the deepest hit there at about 350 meters, hole 85. System still there. 1.5 kilometers of mineralization, still a bit open, but mainly at depth now, starting to feather out, starting down in this area here. This is what it looks like. We announced some results on Monday. That was these two holes, the first couple of holes from that south of the railway area. But we do have a couple of deeper holes in here, and I'd urge you to look out for some drilling that's just landed in this sort of area when we get the assays. But to how the ore body is manifest, this is an indication. It's a big hit, 87 meters at almost 2% copper and 0.5 gram gold. But typically within the intercepts, we have a very reliable basal intercept of higher grade. So in this case, 9 meters at 4% copper and almost 2 grams gold. And then a second intercept that's quite high grade, 24 meters at almost 4.2% copper and 1.25 grams gold. So that whole intercept in an open pit will be taken, but in the underground, you'd focus on those higher grade zones. So the ore body is amenable to both open pit and underground. And as I say, that basal intercept is very, very reliable. We see it on almost every hole. Another example, 144 meters at over 1% copper. That does include a bit of chalcocite blanket up here. Doesn't have much gold in it, but it's pretty good for copper. And then you get into the main Cairns lode itself. Quite a good intercept, 84 meters at 1.5% copper and almost 1/4 gram gold. And that's very vanilla flavor for us. That's very average. And then that is comprised of a basal intercept, again, 28 meters at 3% copper and 0.5 gram gold. So again, amenable and very attractive grades in an underground. 106 was a little bit of an unusual hole in that, yes, it was a good hit, 48 meters at 1.4% copper, but very unusually it had over 6 grams gold. And that's a function of a late epithermal overprint on the system, and which resulted in that subinterval of sort of pretty modest copper, 0.74%, but 132 grams gold. So we're going to have to deal with that in a metallurgical sense. It's a different style of mineralization to the massive sulfide that we're used to in the Cayley lode, and may present some problems in terms of recovery. And then these are the two recent holes south of the railway, very vanilla flavored, very typical Cayley lode intercepts. In this instance, a broader interval of 44 meters at just under 1% copper and a bit of gold, and then a basal intercept of 5.8 meters at over 5% copper and almost a gram gold. So very, very vanilla flavored, as I say. And then hole 65, closer to the railway, another intercept of 3 meters at 7%. So again, attractive from an underground perspective. So we've hit it at depth in a number of other holes, as I alluded to. So we've really got this system over approximately 1 kilometer vertically. We've got 3 structures that are mineralized. We're just finishing drilling out 20% of one of those 3 structures. So there's a long way to go on this project. Our intention, as we are doing now, is to start to drill at depth on that same structure and having some success. We want to start targeting that copper lode splay. There's some good grade mineralization in there, some 7% hits, and bring that down to depth, and then bring the deeper hits that we've had on the north-south structure, 38 meters at 3.6% copper, again, attractive from underground, up to higher, shallower depths. Testing regional targets, that's ongoing at the moment. We have an air core rig active, and the big bang opportunity, of course, is the porphyry at depth that must be driving this system. So this is the way we see it as a development, a phase 1 open pit, a phase 2 underground, accessing 3 mineralized structures that we've identified to date, and a long life development. So the role that the chalcocite blanket plays in that open pit development, we're yet to determine in terms of completing our metallurgical test work. The phase 2 underground, we're starting to drill for that now as the resource drilling for the shallow stuff comes to a close. We think that those additional loads can be accessed from existing infrastructure. And if you think about the vertical rate of advance in a normal underground of 50 to 60 meters vertically per year, if we can demonstrate 1 kilometer of continuous mineralization, you're talking about a multi-decade underground. That is after the first phase open pit. So it's looking like a long life asset to us, but we've got quite a bit of work ahead of us. So the plan is pretty clear, just complete that resource drill out of the shallow stuff. With scoping study is ongoing at the moment. Start to drill Cayley at depth, which is what we've started now, and start to bring in those parallel mineralized structures. So really we're sort of at the edge of that 4th point. And then the scoping study will demonstrate that that phase 1 development underpins the whole development, and then the phase 2 is cream on top. As well, we've got all those regional opportunities that we really think have got a lot of legs and really haven't been touched. So that's a good little segue into our regional exploration. It's a little bit complicated in terms of geology. It's 500 million years old. So originally you had these parallel volcanic belts. They got turned around, and this is the Mafeking intrusion, what they call the Mafeking megakink. Effectively, they broke off. And so you've got volcanic belts here, one's linking here, and then other ones going up north. So that's exactly the architecture we see here. These 2 belts breaking off and then heading up that way, up into moist sort of area. But we control the majority of those belts. And the trouble here is that the majority of the known prospects sit in a little window of exposure here. To the south, you've got basalt. Over here, you've got basalt. And over in this area, you've got scree and transported cover coming from the Grampians up to the north here. So there's only a little window in the central portion where the known prospects live, including Thursday's Gossip. So the cover is not that deep. It might be 1 meter to 30 meters deep, but how to target? We flew a lot of geophysics, including gravity and magnetics, and we think that we've got the recipe to identify blind targets. So Tora West was one such opportunity. It's under 30 meters of cover. We did air core drilling and then drilled it with diamond. We're just waiting for results from the 3rd diamond hole. Effectively, it's copper moly porphyry, and so I enjoyed Les's comments about the value of molybdenum because it's not a well-known commodity. But in the East Coast, there's a lot of moly in some of these porphyries, and it can be quite valuable. So air core anomaly was quite coherent. We're actually currently doing some more air core up here because it's still open, plus additional mag and gravity as well. Just as I say, we drilled 3 diamond holes, and just waiting for those results, and we'll report them in due course. But it looks the real deal. It's real porphyry. This brain rock indicates the top of a porphyry system. Chalcopyrite, molybdenite, potassic alteration looks the real thing. So, sorry, this STW06 is not in progress. It's finished. I'll just keep on going. This is the way we think that the architecture looks. This is one of our regional targets. We call them S29 and S41. They're both magnetic lows here, and drilling underneath basalt cover, but hitting hydrothermal alterations, sulfides, and quartz veining. So, so far in the number of targets we've tested, probably 8 of 19 targets, we've got about an 80% hit rate for sulfides, quartz veining, and alteration. So our targeting method is working very well. So that's the point I wish to make, is that we're getting through these 19 targets and having a very good hit rate, and I'm absolutely certain that we'll be seeing some very exciting results from targets that have never been touched before by anyone. Our schedule, this is us. We've completed that Tour West diamond drilling. We're waiting for results. The regional exploration is ongoing. The resource drilling coming to a close. That long wait for assays, which I'm sure frustrates everybody in the industry, but it is what it is. We're all in the same boat. The resource estimate is all lined up. We're ready to go on that. It's an interesting deposit in that it is 500 million years old, and there's a little bit of structural complexity, which is, provides a bit of a challenge. But once that resource estimate comes out, then we can kick into that scoping study. Of course, it's the future-facing commodity. You know, it's all about this transition to a low-carbon future for everybody. And importantly, whilst you can go to Ecuador when they have a change of government and it's fine to go in there, all they need is another change of government, and then it's not okay. Australia is not like that. So there are very few quality copper projects in first world jurisdictions. And I think that's a really, really significant point to make. And it really means something, particularly to some of the bigger players who might be interested in something like our asset. So we're a first mover. We've got the ground position that we want. We've discovered the Cayley lode. It's a different style. We've got it down to 1 kilometre or more. It's very tall. We've got a lot of drilling to do, but the resource drilling is just about done. We'll come out with that resource, and the potential in exploration, both in the Thursdays Gossan area and regionally, is quite outstanding. Thank you very much.
Copper and gold explorer Hammer Metals is well placed to capitalize on the resurgent interest in the copper potential of the Mount Isa region, with the JORC resource totaling in excess of 400,000 tonnes of copper equivalent metal. Dan Thomas will provide us with an insight into the opportunities within Hammer's portfolio. Welcome along, Dan.
Thanks, Jerry. Thanks to Stuart and the RIU team. It's a pleasure to be here and presenting. Hammer is a copper and gold explorer. We're exploring in 2 of Australia's great metal provinces. In terms of our portfolio in Mount Isa, we've amassed some 400,000 tonnes of JORC equivalent copper resource. We have a team that have made world-class discoveries and to this day continue to make discoveries. We've built a dominant position in Mount Isa, some 2,600 square kilometres of tenure, and it's taken a decade to build this land position in what I would argue now is one of Australia's hottest exploration copper provinces. Importantly, we're fully funded. In terms of a snapshot of the company, I'll let you guys decide whether or not a $60 million market capitalisation for a company with 400,000 tonnes of copper equivalent metal with recent exploration success is a fair value. We've got 8 million in cash. Our directors own 13% of the company and have participated in all of our recent capital raisings. They've made world-class discoveries before and they're looking to repeat the dose with Hammer. Our other shareholders have been with us for a long period of time, and together with the directors make up for near on 50% of our register. Our trading over the last 12 months, you'll see there has fluctuated between 15 cents and down as low as 4.2 cents, with recent exploration success in the region, both within our portfolio and our neighbours Carnaby. I think we're no better time to be considering looking at a company like Hammer. In terms of where we are, we're in between Mount Isa and Cloncurry. So to our northwest, we have the Mount Isa and George Fisher mines. To the northeast, we have Ernest Henry. To the southwest, we have Cannington. And as I said, we've built a position of some 2,600 square kilometres between these tier one major deposits. We're on two big structures. You can see down there to the southwest, the recent discovery, Nil Desperandum by Carnaby. We contain a 5 JORC resources there, totaling that 400,000 tonnes of copper equivalent metal. Our strategy is twofold, really. The first one is to discover additional copper tonnes and move that 400,000 tonnes of copper equivalent resource through to a development stage. My gut feel is we're about 2/3 of the way to moving to that development phase. And we'll do that by finding more high-grade deposits through the region. The second part of our strategy is to find a large tier one standalone deposit. This region certainly has the potential to deliver a tier one standalone deposit. We've had recent extensions to our Kelman deposit. That news went out this morning. So we've identified mineralisation in areas outside of the JORC resource. So there's an instant win for us as we progress our way to that magic figure of an extra 50% of resource. So let's say 600,000 tonnes of copper equivalent metal. We've had recent exploration success at Lakeview in our joint venture with Sumitomo Metal Mining. And as recently as the weekend, we've intersected some high-grade copper mineralisation at a new prospect, which we hadn't drilled before. I mentioned our joint venture with Sumitomo Metal Mining, so a global mining copper powerhouse producing in excess of 250,000 tonnes of copper equivalent metal. They entered that joint venture in the middle of last year, I think providing some validation of our exploration strategy and what we're trying to achieve in the region. I mentioned a new discovery. When I was preparing this presentation over the weekend, I took a phone call from our team on the ground, and we had some good news. We had some semi-massive to massive sulfide hit at a prospect called Ajax. Now, Ajax is one of 12 different targets we're drilling in our current drilling campaign. And you'll see there, we hit 10 metres at 3.5% copper from an XRF recording on site from only 25 metres of depth. That XRF reading is obviously subject to confirmation by an accredited laboratory, and we've rushed those samples through. We're obviously following up a 10 metre at 3.5% copper hit. We're prioritising our drilling at this prospect, and we'll hopefully be adding more holes to this area as part of the current program. It is wet, and it has been a pretty wet season in Mount Isa. Our ability to prepare some of those holes immediately is somewhat limited by ground conditions, but as soon as we're able to prepare those pads, we'll get in and we'll do some more drilling. We put PVC down the hole, so we'll be able to do some downhole EM and try and identify what this potential system looks like and how big it might be. As I mentioned before, I think the Mount Isa region with our neighbour Carnaby and their recent exploration success at Nil Desperandum, I think this is going to be one of the go-to places in Australia for copper exploration. I mentioned before about building on our 400,000 tonnes of copper equivalent metal, and where are we looking to do that? Realistically, what we've done is we've set up a hub that's within 20 kilometres of the Trafalgar deposit. You can see the white feature running in between Mount Isa and Cloncurry. It is a road effectively running between the two. It runs through the northern part of our tenure, less than 20 kilometres from those discoveries and those areas that we have already under resource. So Kelman is a pick of those resources, 350,000 tonnes of copper equivalent metal, and that is where we had the recent extension to the resource. I mentioned our joint venture with Sumitomo. It's in this browner type area here. So they're earning a 60% interest in that particular area. The other areas in the lighter shade of orange here is Hammer's 100% owned grounds. Exploration success at Neptune last year, 100 metres at 0.5%. Ajax sitting just to the north of that joint venture. Elaine, another copper resource, 10 million tonnes at 1% copper plus some gold. And Jubilee, a joint venture with Glencore to the north where there's also some resource. So all of a sudden, within this portfolio, what we're looking to do here is to add to our copper equivalent metal, bring in some more tonnes and get through to a scenario where we're developing in close proximity to a major highway and the associated infrastructure of power, etc. In terms of that trend that we're exploring pretty heavily at the moment within the joint ventures, Trafalgar. When I was here 12 months ago, I was talking about our exploration success at Trafalgar. We've been actively drilling this portion of the belt with our joint venture partner in our current drilling program. Neptune sits down here. You can see all of the little old mining symbols. These are old scale, old time workings, small scale, that were worked in the early 1900s by gougers, taking out somewhere between 10 and 20% metal, 10 and 20% copper. A lot of these prospects haven't been drilled in 100 years. We're the first people to go in there and drill holes at a number of these, such as Ajax, such as Lakeview, all the way up. This trend is highly prospective for further copper mineralisation. I'll talk about the results at Trafalgar from last year. I mentioned the results at Neptune. Ajax, 10 metres at 3.5% copper. I think this whole region has tremendous potential to add the copper tonnes we need to get to a scenario where we become a copper developer. In terms of the systems that we're chasing through here, this term has been used geologically in ISCG and iron sulfur copper gold system. These systems can throw up some tremendous grades, such as that 3.5% that we saw in the drilling at Ajax, but also that we see at the bottom of our Kelman deposit down here. So this is at the southern end of our Kelman deposit, getting intercepts such as this, 7 metres at 23% copper, plus gold, silver. Also, this system has molybdenum and rhenium, and we've heard a little bit about molybdenum from the two previous presenters. The price of molybdenum at $45,000 US tonne presents a completely different economic scenario when you start looking at deposits like this. A recent drilling I mentioned, we drilled to the north. So you can see up here, we drilled 4 holes. All 4 holes hit copper, gold, molybdenum and rhenium mineralisation. Really broad widths, 50 metres at 0.6% copper, a little bit of moly, some gold, other holes with more predominant molybdenum in them, 0.12. We heard what an economic deposit or mineralisation looks like. These intercepts at low depths from 20 metres add good economic potential to the existing deposit that sits here, hopefully waiting to be developed. I mentioned before, what does that look like in section? So I mentioned before, there's loads of mineralisation that we're identifying here that haven't been identified before. So you can see 3 zones of mineralisation. To the north, there's clearly a 4th lode of mineralisation that sits out there that doesn't sit in the resource. This is an immediate opportunity for us to come in, relook at the resource, reclassify it, add tonnes, get closer to that development scenario. The other thing we'll do with Kelman, it's been 6 years since we've done any drilling here. It's been some time since any previous study work had been done. But the current metal prices, copper at 10,000, moly at 45,000 US a tonne, obviously present opportunities to relook at the economics and the potential mining scenarios that might happen here. We'll relook to do some metallurgy, potentially some ore upgrading through ore sorting. I think the economics of this deposit, if they were studied at the current metal prices, would look quite different. I mentioned the IOCG systems and what we're exploring for here, a large tier 1 scale type deposit. We have a number of these areas through our portfolio and we're continuing to do some good work on these systems. The Overlander system is one that presents some really broad widths of mineralisation, all the characteristics you'd see of a typical IOCG system, red rock alteration, a lot of magnetite, some uranium, some rare earth mineralisation, all the classic signs of a IOCG system. We have a number of these types of systems within a very large holding here, and they are all underexplored. Neptune's one such system. Again, this was in that Northern Minerals corridor. I mentioned 100 metres at 0.5% copper. We're currently drilling these prospects within the current program. We have through here, we have 4 discrete target areas targeting big magnetic features that sit in here with high-grade mineralisation sitting in rock chips on surface, copper and gold mineralisation. So testing targets such as Lady Cake. Interestingly, our intersection at Ajax was in a demagnetised zone. So again, there's a highly interesting zone through here which will target another mag feature down here at Sirius and another one down here at Lady Amy. So these are high-quality targets that we're testing in an active drilling program. As I mentioned, some 12 targets in the current program. Our joint venture, just very briefly, last year I was sitting here talking about our intercepts at Trafalgar, 55 metres at 1, 60 metres at 1, plus some gold. Fantastic little system running through here, focusing on the magnetics that run from the south down here at some workings at Victory, all the way up to the Springs. We've drilled 9 holes now at Trafalgar, all of them hitting mineralisation. We're currently stepping out from Trafalgar and we're drilling this target at about 6 different locations along this trend, and we'll have that news flow coming out over the next 6 to 8 weeks, I'd imagine. There's also outstanding results from a lot of work that we've done around some soil sampling, also a bunch of geophysics that have been done. So there's lots of news coming up in the near term. What's ahead and what's next in Mount Isa? We're obviously drilling our program at Orion, Neptune and Sunset, with more drilling to be done at Ajax. I can't wait to see what that system potentially delivers following our initial drill hole there. Some IP surveys will commence towards the end of March, early April. We've seen that work particularly well for our neighbours at Carnaby, so we're hoping that that will unearth some new news for us. We've got some more drilling coming up planned for Kelman, and we're reviewing some of our historical exploration ground down to the south. I've spoken about the Sumitomo Metal Mining joint venture. There's lots of work going on there. The next phase of that earning is an expenditure of $1.5 million. So there's more work to come from that particular set of work in the coming 12 months. I don't have long to talk about what we're doing in the Yandal region, but we have built a portfolio here in WA exploring for gold just south of the Bronzewing gold mine. We have been active here over the last 2.5 years. I probably don't want to talk about this too much. We did a 3,500 metre reverse circulation program literally just south of the old Bronzewing mine here. The 17 holes that we drilled in this area were remarkable in the fact that they contained no gold. Literally not an assay above 0.1 gram per tonne. Have a look just how close you are to the mineralisation here. You're 300 metres away from a multi-million ounce ore deposit, and we got nothing in our drilling. So the one thing that I take out of that I find extremely encouraging is maybe 300 metres this way, there's another big system, another big deposit that sits here. There's a lot of work to be done here. We hit all the right rocks. We hit all the things that we thought we would. It's an unfinished project area for us, and there's a lot more work to be done here on what is a lightly explored property sitting right next to a major mineral deposit here in WA. We are also exploring just north of the Aurelia deposit, which is it was originally with Echo Resources, taken over by Northern Star. They're looking to develop the Aurelia deposits and take the ore down to, I think it's Thunderbox. We've got a project here. We've got a very large gold anomaly to the north, extending over 2 kilometres with some good air core results there, 8 metres at 4, 5 at 4 grams per tonne. We think there's the ability to add a small-scale resource around the target one area at North Aurelia. We'll be looking to execute a drilling program there to define that JORC resource later this year. I think this is a great target and a great area. Obviously, our main game is copper in Mount Isa at the moment, but I think a nice little add-on and potential win for our shareholders. So we're busy. There's a lot on. We have a very active program in Queensland, 12 targets. We've probably still got another 4 weeks of drilling in front of us to go. There's the obvious weight on assays there, but we've got some really exciting targets that we're hitting in that region, not only in our own program and portfolio, but within the Sumitomo Metal joint venture. Our IOCG system review is ongoing. We're targeting new areas through the use of not only our historical work, but looking to reinvigorate it with some IP surveys and other geophysical surveys. And in WA, I mentioned we've got some RC drilling coming up, whilst we've also just completed some soil surveys. So busy, busy, busy. Lots to look forward to in the coming 12 months as we look to make our progression from purely copper explorer through to a copper development company. Thanks very much.
Thank you, Dan. Matsa Resources is a highly active gold exploration company advancing the Brownfields Lake Carey gold project here in WA. 2 significant recent events were the sale of Red October and Devon Mines for 20 million and recommencing exploration in Thailand, predominantly in Phang Nang, where there is potential for lithium. Meanwhile, at Lake Carey, Matsa will retain 553,000 ounces of gold after a sale, and exploration will continue with an exploration target of 666,000 ounces to 1.36 million ounces. Executive Chairman Poli joins us. Paul, welcome.
Thank you for that, and I appreciate the introduction. The picture that we've got up here today is our Fortitude gold project. You can see right at the beginning at the front there, some pits that we did as a trial. Interestingly enough, 6 kilometres to the south is the Binder deposit, where is another potential mine. It's a granted mining tenement. The company itself, codes MAT. We've got approximately 358 million shares out on issue. Our current share price fluctuates between 6.2 and 6.5 cents. At 6.4 cents, we've got a market cap of $23 million. And I will argue, similarly to some of the speakers before me, it's far too cheap. There are many companies in this position on the ASX, and I guess the astute investor has to determine which has got the company that's got the best percentage to go up, best bang for buck. Our directors, there are 4 directors at Matsa Resources. We've added Mr. Ratha Kyaughamsiang. He's our managing director in Thailand. He has been on board now for about 9 years, but we're introducing him today, and that'll become fairly obvious in a minute why we're doing so. As suggested in our introduction, Matsa's had 2 significant developments. In fact, I used 10th of December, where we had the previous RIU conference as the cut point. And I want to introduce those developments because, in my mind, they're certainly company changes. First of all, and very importantly, we have sold our Red October and Devon gold mines. We have sold those 2 mines to a private company just to the south of us, Linden Gold Alliance, who operate the second Fortune gold mine. And it's always been my understanding and my opinion that Red October and the second Fortune gold mine, for them both to be profitable, ought to be in the one entity. So when Linden Gold Alliance approached us, we welcomed that discussion on that transaction. So the area we've sold is a relatively small part of our Lake Carey project. It's the Red October hub and the Devon hub, or the Linden hub as we called it. So we are left with about 385 square kilometres and the majority of our gold resource, 550,000 ounces. The deal that we signed was for $20 million in cash and shares. We received a $1 million deposit in December. We've been advised last night, first thing this morning, that Linden Gold Alliance will pay a further $1 million at the end of this month in 14 days' time. And that gives them the ability to have an extension of time to list to the 28th of April, which is when we expect that they will list. At that time, we expect to receive from them $13 million in cash and shares. I understand that their preference is to pay us $4.5 million in Linden Gold Alliance shares and $8.5 million in cash. There is a further $5 million in deferred payments that need to be paid over the ensuing 24 months. So what that means is Matsa, for the first time in a long time, will be appropriately funded. It'll be fully funded to do what we need to do. There's no secret, over the last 12 months, we have been hurt and hampered by operations at Red October, and that swallowed a fair bit of capital. But by this sale, we no longer have that dilemma. We no longer have that drain on our funds, and everything that we receive is clear to go ahead. There is a loan in the company, and I'm very confident in the very near future that loan will be extended for 3 years. It's a $4 million loan, simple interest payment on a monthly basis, and that will be elongated. So Matsa will be correctly funded. Importantly, as I've said, we retain 553,000 ounces of gold at about 1.9 grams per tonne and 385 square kilometres at our Lake Carey Gold Project. There is still a hell of a lot of value that remains there. The second significant point is Thailand. Matsa has been in Thailand now for 10 years. We were very active up until about 4 years ago when we ceased active exploration due to the political climate and circumstances beyond our control. Importantly, we now say, and we're saying it very loudly, Thailand is a good place to now re-enter the exploration game. That is proven by the success of Kingsgate Consolidated of recent. I think their share prices went from 60 cents up to a couple of dollars. I think they're settling around about the $1.60 mark. And of course, Pan Asia, their share price was 15 cents. They had some very successful lithium discoveries. Share price rose to 80 cents. Today, they sit at about 58 cents. This, to me, is testament. Thailand is now reopened. It's ready to go. Now, since we've been there, We have kept our office. We have kept all of our staff. So in reality, we have first mover advantage. And you will see what that means when I start talking about our tenements in a little bit. What it really means to Matsa is our valuation. I suggested to you that our market cap was $23 million. In reality, prior to the sale, we had an EV on our gold, after accounting for the $4 million loan, of $27 an ounce. Ridiculously cheap, in my opinion. Post-sale, if our share price doesn't go up, our EV per ounce will be $16 an ounce. And I say to you, some of those ounces are reserved at Fortitude Gold Mine. We've done a feasibility at Fortitude, and I'll touch bases on that in a minute. So the transaction we've completed represents a 237% premium to our current EV. Our share price has to be re-rated, and that's where I think it'll go. Importantly, there will be no dilution to existing shareholders if this transaction goes ahead. We've also furthermore said that should that transaction go ahead, we'll actually try and do an in-specie distribution of some of the Linden Gold Alliance shares that we will get. It is Matsa's intention to spend $6 million in ground over the next 12 months, pending the settlement of the sale. This is where that money will be spent. Lake Carey will be doing magnetic surveys and exploration drilling. Currently, those surveys are currently underway. We expect those surveys to be completed within the next 30 days. Pending the settlement, we will go ahead and drill Fortitude North. It is my opinion that I think 6 months, $2 million, and we'll have a resource at Fortitude North. And I think that resource can be quite significant. Our target is approximately 500,000 ounces. We've currently suggested there's 379,000 ounces at a couple of grams per tonne, and that could go as high as 600,000 ounces. We want to see if that's there. We expect it to be. We will also commence work in Thailand. It will take us 6 to 9 months to get the tenements granted in Thailand. To a certain extent, we can manage that. We can control whether that is 6 months or 12 months. The amount of work we can do on ground in Thailand prior to application is significantly more than what you can do in Australia. So we'll actually use that to our advantage. There is no hurry to go drilling there today. We want to find out what is there. We want to map all the pegmatites. We want to understand the geology. Of course, we still have our other projects in WA, North Bore, Fraser Range, and Paraburdoo. Happy to talk to you privately on that. So this is what our Lake Carey Gold Project will look like after the sale. You will note there's no longer Red October or Devon. Can't help but reiterate, 553,000 ounces at 1.9 grams per tonne. It is still a substantial deposit. It is still potential for us to build our own mill and go ahead and start mining. We think that, as I said, we can find another 600 to another million ounces. And most of that sits at Fortitude North, where it's ready to be drilled. We've added some new tenements recently, Carmen, where we've got sampling rock chips at 13.7 grams per tonne. That'll also be a focus of our drilling in the near term. More importantly, we retain Fortitude. Currently, at $2,400 an ounce, Fortitude makes $95 million projected cash flow. At this morning's gold price of $2,600 odd, that figure blows out to closer to $130 million. This is ready to be mined today, fully granted, ready to go. The actual mine itself is a culmination or consolidation of the 3 trial pits that we did. It's fully permitted for the larger mine. We've already designed a tailings facility within our waste dump. We are currently working on treatment options, and our favourite is building our own plant, where we have already conducted a feasibility study, $55 million to go ahead and build that. The transaction that we've just done gives us a valuation basis for Fortitude and gives us a good deposit. Fortitude North. This has got a little drilling to go through. We think, as I said, 6 months, couple of $1 million, and the potential here is for between 380,000 and 600,000 ounces of excellent open pit grade. This in itself is a highly valuable mineralized zone that we hope to turn into an economic deposit. It has the potential to exceed our existing Fortitude gold mine resource. The exploration work that we will do will be centred Fortitude North, the Fortitude, Gallant, Carmen deposit further up at Jubilee, and there'll be other areas as well, Steve's Dam, Fortitude South. First of all, what we're currently doing is we're doing some ground mag work, and that leads us into targeting and vectoring where's the best place to drill. I do want to spend the last 4 minutes of my time talking about Thailand. We saw an opportunity to add to our existing applications. We have and have had for several years now our copper focus at Phetchabun, Nakhon Sawan. Our sampling that we did represented samples like 54.7% copper in a chalcocite mineralized zone. Soil surveys that we had at Chanwan has extended that. Some of those areas are under ALRO in Thailand, and they should be available for drilling within the next 6 to 9 months. And of course, some of the results that we did get from our historical drilling in Thailand was 22 metres at 0.55%. And that was part of a much larger 158 metres at 0.2%, starting at 18 metres. Why Thailand? Well, we think that's probably going to be Southeast Asia's central destination. Very close proximity to China. In fact, there is a railway line connecting Thailand to China. So if you have a copper, a low-grade copper, you could almost have a DSO potential there. With lithium, you're right in there. There is some activity already with processing for lithium in China that's about to take off. Why lithium in Thailand? Well, purely and simply, Pan-Asia success. We've seen some of the drilling results that Pan-Asia had. We're very well aware of the Western Granite Belt going along the western part of Thailand, and we were very aware of the extremely high number of tin mines in that location. So when we started looking, it made sense that there's potential there for lithium. Pan-Asia just confirmed that. So we went ahead and we applied for 942 square kilometres of ground, 65 special prospecting licence applications. And what we've come to realise is out of those applications, 41 of those applications have had lithium occurrences recorded on those tenements by the Department of Mining and Resources of Thailand. So all of a sudden, we're starting to get very excited. And then we've also got ground that's contiguous to PAM, down south of Phang Na, Ruan Kiet, and Ranong, Bang Nao. These are areas I think that you will hear a lot more about over the next few months, especially by Pan-Asia, hopefully by us a little bit down the track. Notable about Phang Na, this is Ruat Kiet, which is in Pan-Asia's main drilling and area where they're putting together a scoping study where they expect 10,000 tonnes per annum of lepidolite, and we are down south from them. I'm going to skip a whole ton of slides. We've put them in there intentionally for you to peruse. But our upcoming exploration is extensive. Substantial drilling at Lake Carey, field mapping and sampling in Thailand, stream sediment, pegmatite mapping and sampling in Thailand. I think once we've got that money from the transaction we have completed, we're going to be open slather exploration. Simply, our investment proposition is over 500,000 ounces of gold. We've got $20 million potential cash and liquids. We've got funding in place for Lake Carey, fantastic exposure to gold, copper, tin, and lithium. I think the re-rating will happen. Thank you.
Galileo Mining is a West Australian company focused on nickel exploration in the Fraser Range and on nickel, cobalt, and palladium near Norseman. We welcome Managing Director Brad Underwood. Brad.
After last year's bumper crop of IPOs, we now have over 700 listed resource companies on the ASX. There are over 100 companies at this conference alone. So I thought I'd start with our key messages, and hopefully some of these will stick with you over the coming weeks as we get into our activities for the year. We have a strong cash position with $9 million in the bank. We have high value nickel and palladium targets. Very importantly, we have a track record of drilling throughout the year. We usually undertake 4 to 5 drill campaigns each year, and we have a pre-discovery market valuation. So it means if we are successful with any of our drilling campaigns, we'd expect to see our company re-rated very quickly by the market. Our activities are in the Fraser Range and Norseman projects in Western Australia, and we are well supported by our major shareholders. Quick look at our share price over the last 12 months. I mentioned before, we undertake a lot of drill campaigns. We get a lot of investment activity leading up to and through the drilling activity, and then in between those drilling periods, the price drops off. So at the moment, we are around 20 cents. As we get into the drilling year, we'd expect to see that increase and increase further if we are successful. Our major shareholders are Mark Creasy, well-known mining entrepreneur, 25% of the company, and IGO have 9%. We have a small 3-person board, which is fit for the stage of development we find ourselves in. If we expand and as we get larger, we'd be prepared to bring more people in to give us the skill sets we need if we go into that development phase. We have a strategic commodity and district focus. Everything we do is here in Western Australia, and it's east and south of Kalgoorlie in the Fraser Range and Norseman projects. The Fraser Range is a good place to be exploring. There have been some high-value discoveries there in the past. It's a developing mineral province, Nova and silver-night deposits. Nova's been mined by our second largest shareholder, IGO. So far, we have found 2 sulfide-bearing intrusions. However, we haven't had economic mineralization associated with those. It does give us a good sense of the exploration we are doing, and we are comfortable with the work we're doing. We've still got a lot of ground to explore there, and hopefully we'll find a sulfide-bearing intrusion with economic potential. We have a number of untested EM targets at the Fraser Range and ongoing EM surveying to define new targets. Our Norseman project is a very fertile part of the earth. We have nickel, cobalt, palladium, gold, and lithium potential. However, at this point in time, we are focusing on the nickel and palladium, and that's because in one of our recent air core drilling programs, we hit some massive magmatic sulfides at the bottom of an air core hole at just 52 meters depth. So very much a focus of our exploration activity in Norseman at the moment. Now, Fraser Range project, the easiest and quickest way to understand the potential of the Fraser Range is to look at the global analogy in the Thompson nickel belt in Canada. I've shown this slide a few times before. For people who are unfamiliar with it, there are over 10 deposits, over 100 kilometers of strike length in the Thompson nickel belt, similar scale to the Fraser Range. And in the Thompson nickel belt, we have 146 million tons of known resources. They have been mining and exploring that area for over 50 years. We compare that with the Fraser Range. We have a similar or even greater strike length of potential to be explored, and the total combined resources at Nova and at Silver-Night around 18 million tons. So for us, it's very much an untapped, immature nickel belt. We have good quality ground, and it's our job to go out and find if we have a discovery to be made in that area. For us, geophysics really leads the way in our exploration of the Fraser Range. And that's because we have a layer of sedimentary cover on top of the prospective basement rock. So anywhere between 10 and 100 meters of cover rock, it means that mineralization at that depth is still very economic, but it's that extra layer that makes it a little bit tricky to find. Initially, we use magnetic and gravity interpretation to mark out those zones that have prospective intrusions, or we believe have prospective intrusions. And we try not to get too clever at this early stage. We blanket large areas and come back with EM surveying over large portions of the ground to see whether we have conductors that are worth drilling. Intrusions in the Fraser Range can take a number of different shapes. There's technical terms, tonaliths, dikes, seals. Sometimes they will disrupt the magnetic pattern and they'll be very obvious for interpreters. Other times they will hide in the background. So we look to explore large areas, and so far we have 2 intrusions, 2 separate prospects with mineralized sulfides. At the Atlanton South prospect, we have a mafic ultramafic intrusion, which is the classic Nova model for the Fraser Range with their high-grade nickel. We have intersections between 20 and 40 meters, around 0.2% nickel and 0.14% copper. Not quite economic, but it is showing us that the mineralizing processes that we need to create an economic discovery are operating on the ground, or were operating on the ground. At the Delta Blues prospect, this is slightly different for the Fraser Range. In going through that same exploration methodology, we have come across a felsic mafic intrusion complex with semi-massive copper sulfide and a touch of gold. For us, this has given us a good boost and an increased confidence in our exploration methodology and in the prospectivity of the ground itself. So our most recent drilling program at the Delta Blues prospect, it's a 500 meter by 500 meter conductor, very strong. And we undertook the drill testing phase of exploration in 2 stages. Initially, we came along with an RC program, drilled the top of the conductor to confirm it was sulfide, and then came back with a deeper diamond hole beneath that to test for extensions to the sulfide and for increased grades. We've sent off the RC chips for petrography. It's a felsic intrusion of a type called tonalite, which is also categorized as a trondhjemite. Very technical geological terms. The main thing to understand is there's probably greater potential for copper and gold than the nickel we were originally looking for. So we are professional explorers. If we find a copper gold deposit, we won't be too disappointed, and we'll continue with what we're doing. We are still waiting for the assays from this core to come back, and we'll complete downhole EM surveying, looking for any additional targets in the area. Recently, we also picked up a new tenement. This is a long strike from areas that we have drilled previously. Our Lantern South prospect, we know there is disseminated nickel copper sulfides there. At our Lantern East prospect, we have pyrrhotite dominant sulfides at that location. We have our Easterly prospect, which is a large-scale EN conductor at 180 meters depth. It's still waiting to be tested. And we've now picked up an additional 70 kilometers of square ground, 70 square kilometers of ground along strike from those prospects. So using the exploration methodology I described before, we've interpreted some intrusions on that ground. We know the cover is reasonably shallow. We'll come back and do first pass EM surveying, looking for conductors to add to our upcoming drill campaign. Onto our Norseman project. We have just under 300 square kilometres of prospective ground, the southern end of the Norseman Walloon Belt. It's a fantastic place to be exploring. We're 10 kilometres from Norseman, close to the sealed highway, gas, water, road and rail infrastructure, and 180 kilometres from the Port of Esperance. All of this infrastructure means that if we do make a discovery in this area, it's a lot quicker and easier to get into development than if we were to make a discovery in a more remote part of Australia. The tenements are also very prospective, which helps a lot, of course. We have magmatic nickel sulfide, komatiite hosted nickel sulfides, PGEs, gold, lithium, and nickel cobalt laterite mineralization. So a huge range of different minerals. We are focusing on the nickel and palladium at the moment. We also have a JORC compliant 25 million tonne laterite resource. At Norseman, there are 3 geological locations that we're exploring for nickel and PGEs. We've had a number of relatively high-grade palladium and platinum results from from weathered rock. But for us, the main interest is in the sulfide potential at depth, and that's because the nickel and palladium associated with the sulfide is a lot more extractable, and therefore it's a lot more economic. So we do have some very nice headline numbers from the weathered rock, but it's really the fresh rock that we're chasing. You will see on the section in the front here, we have a sulfide zone, which represents the location at which the ultramafic sill is punched through the sediment and dropped out a layer of sulfides along that contact zone. So it's a classic position for the development of sulfides. We have our best drill result today is 27 meters at 0.6 gram per ton palladium, and with platinum, copper, and nickel credits. But for us, what's really important is it appears that the grade and thickness is increasing to the east, and that's one of our best target zones there. The second geological location for the development of sulfides is shown in the slide at the back, and that is at the junction between the mafic and ultramafic components of that sill. Also a classic position for the development of sulfides. There are a number of ore bodies around the world that are mining at that exact location. We have wide intercepts of low-grade palladium mineralization, 70 meters at 0.2 grams per ton, but we also have over 10 kilometers of strike potential. So we have interrogated that contact zone using air core drilling as a first pass technique to give us a guide for later and deeper RC drilling. However, the air core results are taking some time, so it's a good and bad way of looking at it. The good way of looking at it is that we have a very strong news flow through the end of February and March. The unfortunate part of that is we submitted those samples in November and December. So it has taken some time to get the assay results back. And of course, that has an impact on the design of new programs for follow-up drill testing. The third position for the development of nickel and palladium at Norseman is related to the Jimbalana Dike. And this is the area that's really taken a lot of our focus at the moment. The Jimbalana Dike is over 300 kilometers long, east-west, geological similarities to the Great Dike of Zimbabwe. And we have completed soil sampling over the top. We have some very good soil sample results, 0.8 grams per ton palladium and 0.2% in soils. Very good indicators of the fertility of that rock unit. But when we matched the soil results against our hyperspectral and LiDAR data, it showed that there was an intimate connection between the soil samples and the subcrop and outcrop of the Jimbalana Dike. Perhaps not a surprise, but what really struck us was the lack of soil anomalism over those areas with even a shallow level of cover. So it presented an opportunity for us to drill across the margins of the dike. We drilled north-south oriented lines, targeting those areas that we believed had potential for massive sulfide development. And in our first pass air core program, we intersected exactly what we were looking for at the bottom of one of those holes. So we have 1 meter of a massive magmatic nickel sulfide at 60 meters down hole. And grades about 0.24 nickel, 0.35 copper, and a touch of cobalt and palladium. For us, it significantly increases the prospectivity of our ground, and we immediately went back and completed EM surveying over the top of those areas. So what we've shown is that we have a very strong conductive body between 70 and 80 meters depth, immediately beneath the air core intercept at 53 meters depth. It's a standout drill target, and we anticipate drilling that in the coming months. In addition to that, we came across a very strong conductive body on the southern margin of the Jimbalana Dike, also under shallow cover. We have put some air core holes through that, for which we are waiting the assays. There is no indication as to what that conductor is yet. The only way we'll find out is by drill testing. However, it does look to be in a very good position for the development of sulfides. We also have our nickel and cobalt laterite deposit. We'll be focusing a little more on this over the coming year as the cobalt price has improved. And I'll leave you with what I think of as our significant investment opportunity. We're very highly leveraged to success because of the way that we run our exploration drilling campaigns. We are well funded and supported junior company. We have our highly prospective Fraser Range and Norseman projects. We're a very active explorer, and we're focused on the high demand metals of nickel, copper, cobalt, and palladium. Thanks for listening. We're at the booth for the next few days. If you want to have a chat, please come by.
Thank you, Brad. Andrew Tyrrell is an explorationist with more than 20 years' experience in the minerals industry and recently joined Gold Road Resources in 2021. He's Gold Road's general manager for discovery and is responsible for leading the discovery team in the pursuit of significant new mineral discoveries that support the company's strategic pillar for organic growth. Welcome along, Andrew.
Thanks to the sponsors and to Vertical Events for organising this event. It's great to see so many people in attendance today. Many of you will be familiar with the Gold Road story, a successful explorer, a developer, and a producer with our Tier 1 Gruyere gold operation. However, Gold Road is not a company to sit idly by and rest on its laurels. The company remains focused on growth, an important cornerstone to Gold Road's vision as a long-term, successful and sustainable exploration and mining business. We continue to focus on delivery and shareholder value through an increasing resource and reserve base at Gruyere and progressing our 100% owned flagship Yamana project through resource addition and further significant discovery. The company is well positioned with a strong balance sheet, a robust project pipeline, and a strong technical project team that focuses on excellence and performance. You can find our disclaimer on the company and ASX websites. Gruyere continues to deliver. The asset is a long-life, low-cost operation with a more than 10-year mine life, which generates a steady free cash flow stream and provides Gold Road a solid platform for further growth. The free cash flow generation allows the company to provide a return to its shareholders through consistent dividend payments and funds exploration at our flagship Yamana project. Gruyere really is a fantastic Tier 1 gold asset. It's a low cost to operate, low strip ratios, and consistent grade of over 9,000 ounces per vertical metre supports this Tier 1 status. 2021 was the mine's second calendar year of operation, in which Gruyere produced 247,000 ounces of gold. Production guidance for 2022 is between 300 and 340,000 ounces of gold, keeping the operation on track to meet its 2-year mine outlook of being a 10 million tonne throughput operation, producing 350,000 ounces of gold per annum. The Gruyere growth strategy continues to focus on increased mill throughput, optimisation of mining and processing methods, and an enhanced understanding of the deposit at depth and its underground potential. At the end of 2021, Gold Road saw a notable increase to the Gruyere joint venture total ore reserve of approximately 1 million ounces to 4.5 million ounces of gold. Early in January, Gold Road also announced a modest 70% increase to the company's mineral resource base at our 100% owned Yamana project. With more than half a million ounces now defined and primarily located within the southern project area. Gold Road's attributable mineral resources have grown substantially to 4.7 million ounces, underpinning the company's growth strategy at Gruyere and in also developing a potential second standalone operation at the Yamana project. During 2021, a 12,000 metre deep framework diamond drilling program was completed at Gruyere. Up on the screen, you'll see a long section of the Gruyere deposit showing the locations of these holes. Widely spaced drilling up to 1 kilometre below surface and across 2 kilometres of strike were completed to better constrain the scale, depth and strike potential and continuity of mineralisation at the Gruyere mineralised gold system. Results have been received for most of the drilling and returned significant tenor and width broadly in line with expectations. The mineralised porphyry is thickest through the centre of the deposit, becoming narrower in the north, but returning better, higher grades. The final assays for this program are expected over the coming weeks and economic studies will follow. In a mineral resource update to the market in January, Gold Road announced a 70% increase to its mineral resource from the Yamana project. The resource increase incorporates extensions to the Gilmore and Renegade resources and maiden mineral resources for the Smokebush and Warbler deposits. Resource models were constrained with optimized open pit shells and underground stope shapes based on a 2,200 per ounce gold price assumption. Most of the mineralized resources are located within the southern project area, and work completed by Gold Road over the past 2 years has really highlighted this part of the belt and its potential for hosting multiple economic ore bodies. If you look at the figure on your right, you'll notice many of our advanced projects and prospects are also located within this area, and I'll talk to those in a minute. On the exploration front, Gold Road continues to target a standalone operation within the Yamana project, where we are looking for discoveries that will make a significant impact to the business. We believe that the southern project area is where we need to be to achieve this goal. For 2022, Gold Road will be allocating $30 million of exploration towards exploration, with 85% of that directed to Yamana. We expect to complete around 160,000 meters of drilling in 2022. Project generation activities and business development will also continue and will aim to replenish our project pipeline. Investment allocation of all exploration targets and project opportunities is aligned to Gold Road's system of stage gating and peer review. The Yamana project is and remains to be a compelling value proposition and a frontier region for exploration. The company holds a contiguous land package of approximately 4,000 square kilometres over an endowed Tier 1 greenstone belt, as shown by Gribbin, and remains underexplored relative to the other greenstone belts throughout the Eastern Goldfields. To unlock the potential of this prospective region, the team applies a holistic and integrated approach to their assessment of the belt's geological setting, the major controls to mineralisation, and the mineral system understanding. The application of framework studies forms the core to our exploration team's work and are the foundations to a disciplined and effective exploration process. Through these analyses, the team integrate those data layers that are fundamental in assessing the prospectivity and mineral potential across our tenure, and assist the team in their identification, prioritization, and testing of the highest quality targets. Through this process, the team aim to increase their probabilities for that meaningful discovery. The types and quality of data collected, along with the group's expertise in interpreting these data sets, are critical in allowing the exploration team to build an integrated and robust geological framework model of the areas in which we operate. Use of innovative techniques such as seismic and magnetotellurics underpins the development of these framework models, along with the more traditional geophysical and geological targeting methods. These framework models are a fundamental component of understanding belt architecture, fluid pathways, and local controls to mineralization. This aids the team in their targeting and improves our probability for success. The southern project area is an area that covers more than 800 square kilometres, and it remains a key focus for the exploration team. As we have previously stated, it contains all the right geological ingredients for hosting world-class ore bodies, such as the right belt architecture, the right structural geometries, and the right host rocks. In 2021, the team completed over 200,000 metres of drilling, which is a real credit to them. Through this work, we have defined a number of multi-kilometre regolith anomalies with broad regional spaced air core drilling, as well as significant bedrock mineralisation across several prospects. In fact, we are getting multiple 20-gram intersections of both air core and RC. In 2022, the team will follow up these priority targets with advanced RC and diamond drilling, when we already have 2 rigs on site. Air core rigs are also scheduled to mobilise later this quarter. Early stage RC follow-up bedrock testing is returning encouraging results across several of our highly prospective targets. These include Abydos, where a greater than 3-kilometre regolith anomaly was followed up. Drilling intersected laminated quartz veining and altered porphyry, and these are only some of the results returned. And these include obviously the 22 metres at 1.4 and the 4 metres at 9. This is where the RC is as I speak. At Earl, over 600 metres of continuously mineralised shear has been tested and remains open in all directions. Some significant results for this target include 17 metres at 1.3 and 15 metres at 1.2 grams per tonne gold. At Waffler, we completed a maiden RC program that tested a 4-kilometre strike of golden regolith. The drilling returned 10 meters at 1 gram and is associated with quartz veining within a mafic host rock. We're still awaiting most of those assays. Other exciting emerging targets that the team will aim to follow up include Gilmore South, which is located immediately along strike of our 300,000 ounce at Gilmore, resource at Gilmore, and hosted within the same rock packages. Warbler, where recent drilling was completed along strike to that recently announced resource, and at Kingston, where Aircore is returning encouraging results from a structural position along the Smokebush shear zone, which is similar to that seen at both the Smokebush resource and at Earl. Discovery is really directly linked to the quality of the team, its ability to effectively explore and in the quality of the project pipeline. At Gold Road, we have a team that is driven to find that next big one, who strive for technical excellence and who use the latest methods and innovative approaches to data acquisition, targeting, and in understanding the regions that we explore. Through their work, the team continually look to enhance the quality of our exploration project pipeline and to deliver on our strategy for growth through discovery. In summary, Gold Road is in a strong position to support growth. Gold Road owns an 11-year cash flow producing asset at Gruyere. And as a consequence, Gold Road is in a strong cash position and pays a dividend. Production at Gruyere is growing and we see huge growth opportunity at Yamana. And most importantly, we have a great technical team. And I have confidence in their ability to deliver on that elusive next major discovery. Thank you.
Western Areas is a low unit cash cost producer and active explorer with high-grade nickel assets at Forrestania and Cosmos, alongside several exciting greenfields exploration opportunities within Western Australia and South Australia. To tell us the Western Areas story, we welcome Graeme Gribbin, General Manager, Exploration. Welcome, Graeme.
Thank you to the RIU and to Vertical Events for the opportunity to speak today on the Western Areas story. I'm just going to go and give you a quick corporate overview and then look at some of our growth projects attached to the operations for Western Areas, and then the meat of the presentation will be looking at our exploration projects and some of the exciting opportunities that we're seeing. Just the usual disclaimer statement there. So Western Areas, what do we aim to be? We aim to be a sustainable, profitable, nickel-focused base metal miner, building value and scale while maintaining financial strength. How do we do that and how do we continue to do that? Low cash cost, high-grade nickel sulfide deposits helps, and we have some very high-grade systems, particularly at Forrestania. No debt, so 142 currently in the bank. Strong growth. So I'm going to talk to some of the growth projects that we have, particularly centered around Cosmos, the Odysseus mine and AM6. And we also have the next pipeline of projects at Forrestania, the New Morning and Diggers South. And then returning back to Cosmos, Mount Good, which is literally the elephant in the room in terms of size. It's a large system, and it really, when you see some of the numbers further on, you'll see what I mean. And nickel leverage with Panoramic, we have that strategic 19.9% stake. As a company, our ESG focus is strong, and we mean what we say and follow up through actions. So the company has always had a strong environmental focus. Lots of our projects we operate in nature reserves. And we always aim above the requirements. I've been out in some of the projects, particularly out in South Australia, and we literally do sweep up after we do some of our drilling. It's a sight to see. It really is. Socially, we have very strong engagements and relationships with our traditional owners through the Balladong, Far West Coast in South Australia, Marlinyaguli and Balladong, to name just a few. Just looking at some of our growth projects here. So I've just got a table here that just summarises the key resources. The table's larger than this, and in the December quarterly, you draw your attention to that if you want to see the full resource list. Forrestania there with our two operating mines and the resources there. and then Cosmos, which really is the future of the company. And we've highlighted Mount Good there is just to show you the size of that system. It's basically a large Mount Keith style disseminated high tenor, low grade system with a lot of nickel metal. And you'll see shortly where it sits in the broader Cosmos picture. So once again, just following up on that, having a strong nickel growth, having a pipeline is really important. And there's been a shift over the last few years. You'll see there in the bubble chart there, the Cosmos projects are dominating the story. Clearly, with our main producing projects at Flying Fox and Spotted Quoll, Flying Fox being quite mature, Spotted Quoll still going strong. But the big players coming there are Odysseus, which we've started production in October of last year, and the other projects at varying stages of feasibility with AM6 and Mount Good, and some of the other projects that are at an early stage of either scoping study or pre-feasibility. So just focusing on Cosmos, you can see the main Odysseus system here, which is where our recent development towards production has been focused. And it's a large system, 8.1 million tonnes, greater than 10-year mine life. And coupled with that is the AM6 system to the south, which has been a focus in recent times. Ore reserve of 2.1 million tonnes. And the significant upside we see at Cosmos centres not just around Odysseus and AM6, but areas further around. One area of focus is this large, massive sulfide system beneath Odysseus, up to 22% nickel in some of this. So we're talking really high grade. It's a very high tenor, high grade, fertile area. And when you get massive sulfides at Cosmos, they're sort of the numbers you can get, not always, but that's its potential. And also, as I mentioned there, mineralisation to the south it's still open below AM6, and we're basically only constrained by drill platforms at the moment. So AM6, just looking at we're looking to the north there. So that's at a very advanced stage of feasibility. There's a few things to do with ventilation and hydrology work that's ongoing. Basically the planning for mining access will be from the existing decline to Odysseus, utilising the shaft for all haulage. It's long hole open stope method and paste fill and top down centre out mining sequence. Mount Good, also looking to the north there, doesn't really give you a sense of the size of the system, but that's at a scoping study stage. For an underground or open pit option. We've just completed a 3-hole geometallurgical and resource program with those holes there in green. So those holes have been sent off for composite metallurgical and assay results. As we've heard by several speakers, the assay delay there will take us well into this year. And not forgetting Forrestania, it's been the lifeblood of the company, and it continues to be, with the Spotted Quoll and the Flying Fox systems there shown in that long section at the bottom. It's been mining in the area since 2005. We have well-established infrastructure, and there's other projects surrounding the two active mines that will be the next pipeline of work. We've got the Scats heap leach project, which commenced last year. And in terms of projects that could bring nickel, the new Morning Daybreak system, which is centred there in the middle, and Diggers South, which is further to the south off the long section here. So now I'm just going to talk about some of our exploration projects. I've put this slide up before. It just captures the essence of where we're working. We're predominantly a West Australian exploration-focused company, with the clear exception of the largest piece of real estate being the Gawler project in South Australia. We've still got a dominant holding in the Forrestania nickel belt. A couple of years ago, we expanded our Cosmos lease holdings to include some tenements in the Kathleen Valley, which are prospective for gold. We continue to advance our exploration in the Western Gawler in both our 100% held ground and in our 75% interest in the Iluka joint venture there at Western Gawler. And we're in the second year of our farming joint venture with Metalhawk on several emerging areas of interest for us at Emu Lake and Kanowna East, just to the northeast of Kalgoorlie. This is also, I like this slide to show the long section there at the top on the left, showing the entire system, if you like, at Cosmos. Apart from the main future mining centre there, extends all the way down to Neptune, which is on the edge of Lake Miranda, and the real estate continues another couple of kilometres further to the south to Zeus. But there's 9 kilometres of prospective rocks there. The Leinster-Wiluna nickel corridor is well known. And apart from those target areas that were talked about, some of those areas in green have been focused historically for us. And we believe there's a lot more nickel to be unlocked from this system. One of those areas that was a focus for us is Penelope North. So just immediately to the south of AM6. It's an underexplored corridor. It's a difficult area to explore, particularly from surface, quite expensive. So we took the opportunity when development was opened up, accessing Odysseus to test some of the areas immediately to the south of AM6. Some of our surface intersections I've got up there, so 48 metres at just under 1% nickel, including 19 metres at 1.37. That's with very little sulfur, by the way. We're talking tenors of about 30 in this area, so it's very high tenor. We did manage to get some underground holes from the southern end of the development platforms, and the one intersection I've got up there is 5.3 metres at 1.36. You might say that's not very thick. We managed to only intersect the bottom basal contact coming from the hanging wall, the footwall end. So that hole was abandoned just due to challenges with the drilling. So we believe that intersection could be a lot thicker, but we just weren't able to test it. So to really unlock the potential in that area, we need to develop some new drill platforms, which is the long-term plan. I mentioned the gold prospectivity at Cosmos. Kathleen Valley, we've continued to test our prospectivity in that area. We focused in on the main road prospect in recent times, and we just completed phase 2 of diamond drilling in late January. So we've intersected quite a lot of pyrite and pyrrhotite and alteration on the targeted mafic, ultramafic contact. With 4 holes have been completed to date, following up on some of the intersections that we had in phase 1, including 9.3 there at 6.8. Those have all been sent off to the lab and are in the queue, but there's some promising signs, certainly from the alteration and the sulfides. Forrestania, apart from the mine and the exploration around there, we completed some seismic work a year or so ago now, looking immediately north of Spotted Quoll to see if it could image structures and help us refine our targeting. The key takeaway for me from this was that we were able to help image some of the adjacent belts, particularly the Takashi belt here, which is this parallel belt running along the Western Ultramafic belt, which is a host to most of the nickel. And we're able to sort of get a new structural understanding of how those two belts connect. So it did cause us to refocus our efforts in the Takashi belt. We completed some RC drilling there. Didn't make a discovery, but we definitely found some areas of fertility that'll warrant following up in the near future. I talked about Metalhawk. We're in the second year of that joint venture, targeting 3 areas at Kanowna East, Emu Lake and Fraser. We've mostly focused on the two, the Kanowna and Emu Lake, with the Fraser being in the Dundas Nature Reserve. It requires some extra environmental work to gain access to that area. We've seen some early encouragement there. We've also commenced the first diamond program on the Metalhawk joint venture with some EIS co-funding with 3 diamond holes testing a very, in our view, prospective corridor of ultramafic rocks, about 10 kilometres, 12 kilometres along strike from the Black Swan, Silver Swan complex. So here we are. So Kanowna East, just north of Kalgoorlie. It's a prospective area. It's relatively underexplored considering how close it is to Kalgoorlie. It's the central area where we've doing most of the work. has been predominantly under between 2 to up to 50 metres of cover, lakes, sands and clays and paleo channels. And we've just completed an RC program there, testing about 6 kilometres of strike. So we're able to help define and refine some of our ultramafic contacts and the dips and angles that we think that body is positioned. And some of the early XRF values are promising, but all of that material has been sent off for assay. I talked about the EIS diamond drilling program. So what's the size of the prize out here? Of course, we're looking for it. We'd like to think that there's another black swan, silver swan here. So this is an aggressive program with co-funding, EIS funding, 3 deep diamond holes, testing what we believe is the more interesting part of the ultramafic there to the south. So we've commenced the first hole just a week or 2 ago, and all of these holes in collaboration with EM will help us to look for the potential for a larger footprint system. Clearly, it won't cover the whole area. It's 2 kilometres, 3 kilometres of strike length, but it's a first step. Emu Lake, so another 50 kilometres north of Kanowna. It's proximal to the Binti nickel-Gossan deposit that RDL Resources have. We've got about 16, 17 kilometres of strike length there. It's very underexplored. It's basically had historical soils and shallow RAB and air core, with only a small section of RC just off the bottom of the page, just down here, and essentially it's untested. So a first phase air core program was completed, testing 2 interpreted belts through here. Early stage results and logging observations have confirmed that the Western Belt appears to be the most prospective, certainly for fertile ultramafics. And the Eastern Corridor appears to be more of a mafic association. So some of the early nickel values there, they're all in oxide values, but we were seeing some interesting nickel copper, chrome ratios towards the bottom of some of these holes. So this is really encouraging. And finally, on the Western Gawler project, so I've got Ian Gregory over here and Michael, who are the 2 folks that have been looking after Metalhawk and Western Gawler. So if you have any more questions, they're in the room. This is a large piece of real estate. We've been in there for 6 years, testing having ground covering the main Fowler domain in South Australia. We were successful in 2020 in confirming the area has the potential to host large amounts of nickel sulfides with the Sahara discovery in 2020, following on some good work that Aluka did prior to us. An additional 3 tenements were added, buoyed by that result in 2020, and we've continued our exploration since. It's a great camp scale opportunity. It has the right structural setting. It's the lithospheric boundaries in collaboration with some of the GLAM database work we've looked at tells us we're in the right area. Sahara, we've drilled 19 diamond holes thus far, and we've also done a suite of regional air core holes in some of the prospects further over to the east here. And the South Australian equivalent of the EIS, which is the ADI, we've got several co-funding programs for diamond drilling and geophysics in the area. I'll skip over this. We have shown this before, but basically it's the Sahara project. 12 holes have been completed so far, and you can see we've defined about almost a kilometre of nickel-bearing material in this intrusive body. Some of our regional projects. So this is what we're seeing in some of our diamond holes from the regional projects. So this is sitting out here to the east of Sahara. So it's showing that we're seeing lots of intrusions out there that have the capability to host nickel sulfides and a nickel bearing. The ADI projects, there's some of them there. So we've got 4 research projects going there in South Australia, and they're all co-funded through the ADI, with the exception of the bottom one there, which we're funding ourselves, the age dating program there. So we've got lots of work trying to pull apart the geology and understand how we can target. Forward plan. So the recent drilling has confirmed our belief that the area has a potential to host large systems. Commencement of a regionally extensive magnetotelluric survey will be occurring imminently to help us in that process. And we're well on our way to completing a large regional extensive air core program through into the end of this quarter. on some of those regional targets as well. Thank you very much.
And that takes us to afternoon tea. And the next session, these are 10-minute sessions. We're calling them power sessions. And they will be conducted on 10 minutes. There won't be any overtime allowed. 240 volts will be going through the lectern if they go over.